Hey there, and welcome to the update. Today our focus is capitalizing on change, opportunistic real estate investing here in the US. Today I'm here in iconic Los Angeles, California. So stay tuned to learn about where we find alpha returns in this exciting market. I'm in the heart of Silicon Beach, which is a typical submarket of what we call an innovation-led city, or ILC. And ILCs are tech-leading markets, and they're highlighted for the strong growth projections, which are fueled by the ongoing global digital transformation. This is the heart of the innovation economy. We target epicenters of innovation. These markets are often located near major universities and major tech hubs like Silicon Beach. These high-growth markets attract and retain the population and the wealth necessary for resilient, well-performing real estate markets. So here's a look at the Playa Vista Media Center. This is a cluster of the exact types of companies we create spaces for over the last couple of decades. You'll see entertainment production, digital gaming studios, streaming media producers, e-commerce centric HQs, and low-rise creative flex office. These innovation-led cities, number one, sustain tenant demand, they support rental levels and capital values, and ultimately alpha returns when blended with our innovative approach to adaptive reuse, the deep reposition method.
Hi, I'm Stu Laureano. I'm the Director of Investor Relations for Southern California Equity, and thank you for taking that quick trip with me through Silicon Beach. And after taking a look at how innovation is changing market demand, let's take a look at how market dynamics are impacting supply. So we're operating in exciting times, and the partners believe we're on the threshold of a new economic cycle. So let's take a look at the snapshot of our current market. And here's what we know. What we know is some say market has tailwinds, some say the market is experiencing headwinds, some say both. The picture's more nuanced than that. It depends on sector, it depends on class, and it depends on location. There is obsolete office product out there, no doubt, but office is not obsolete. We are experiencing what we call a flight to quality, well-located, premium products performing very well. There is an undersupply of premium product, and that is where we are able to seize the moment here. And there are negative headlines. There is negative sentiment. We'll continue to see negative headlines and sentiment because of deals done in a different environment. These are last year's storylines, and sentiment is based on valuation rather than value creation, which is our sweet spot at Southern California Equity. What we know is negative sentiment will always lag behind the actual market, and what it does is it's creating a generational capital deployment opportunity. So where's the market moving? What are the patterns? There's always patterns in markets, especially if you've been through several market cycles. So if you look at the market cycle coming out of the GFC, values bottomed well before the sentiment suggests. Peak was in 2007, bottom was in 2009, and what we saw is as the market recovered, sentiment was still negative and really just trailed the actual full market recovery by just a few months. So some of the best fund vintages have occurred in times when values are correcting. And from a historical standpoint, 1993 stands out, and we've been around long enough to see that. And it was a year where valuations were still 2 years away from finding a bottom. But funds launched in that year delivered the second best vintage in the history of North American funds. So given that context, history would suggest that 2024 will be an excellent vintage to put dry powder to work. And what we know is the market cycle will not just suddenly announce itself. In a world where we believe the markets have bottomed, or at least worst case in a trough, our job is to aggressively deploy capital. And when we look at the bottom, the Green Street Commercial Property Price Index shows that we're 37% off of the peak, which is a serious correction on values, and we've remained with that being unchanged for the last couple of months, which which tells us that the market has actually stabilized. And our conviction is that to wait for the all clear sign is you've clearly missed the moment. In addition to that, commercial mortgage-backed securities are reopening, and just over the last year, we've seen a close to 5x increase in issuance. So we are in a new market cycle, and at least the threshold. So let's take a final look at what makes us unique. And we're able to help you diversify your portfolio for a couple of reasons. We are in and offer a decarbonization of your portfolio. It's a very special situation with our approach to adaptive reuse, the deep reposition method. And, we're a specialized operator, as we've already talked about. Proprietary adaptive use process has never been executed in a market like this before. The special sector we operate in is Class A premium low-rise creative flex space, high demand in the innovation economy. And this is something that's very, very cool. The special market that we are operating in we call a fragmented upper middle market. It's just below what institutional investors are looking at on their radar, and it's above what individual investors can actually afford to work. So we're poised for our investors to do great things.